You there?
We'll start in a minute or two. Just give us a two. I'm going to switch on your mic. Okay, sure. Okay, great. Yeah. Good evening to everyone. Welcome to the Graduate Center. We're delighted that you could come out at such short notice.
for what we regard as an absolutely critical event. There have been many discussions of many different issues involving our current situation, but most of the discussions are focused on the political questions, setting those aside, not necessarily connecting them to the underlying economic issues. Where the economy has been discussed, it's been discussed in very short-term ways. You know, TPP, NAFTA, Carrier air conditioner. I now see Senator Sanders talking about an Outsourcing Prevention Act. Many different sort of short-term things are being scattered left, right, and center, more right than left and center. But there's very little discussion of the underlying fundamentals of the economic situation, which of course is deeply connected into the political crisis. So we thought that one of the things that we want to try to do this evening is to really address some of the underlying fundamentals of the situation as a means not to ignore the short-term things, but in order to give us a way of addressing short-term issues in a more stable and perhaps profound way. So that's the objective tonight, to really deal with some fundamentals, but also to deal with some of the current issues, obviously, and some of the very difficult choices that we face. And we hope that we'll be able to make some headway in that regard. Before I begin to introduce the speakers, who, as we all know, absolutely need no introduction, I want to first of all, thank you all for coming at such short notice. The notice was very short. It was very difficult to get it going. People, putting together their schedules, all of that. So we're delighted to know that people made the time to come out, and it is really a confirmation of what we all know, that people are deeply committed around the issues which we face, right, and are willing to carve out time at short notice to address these issues. So we thank you very much for coming out at such short notice. I want to also thank, before, not doing it at the end, but doing it at the beginning, because, we forget it, the people who made this possible, people in the Center for Place, Culture, and Politics, Mary Taylor and her team, Mary sitting right there, the people in the Center for the Humanities, Samson Starkweather and his team, people in public programming, Karen Sander, Tim Ellis, Jimmy Koch, all of these people who did all the work to put up this platform, to get all this lighting, all of this microphone, all this stuff, without which nothing happens. So I just want to say a shout out to them. Thanks very much. We're very much reliant on your continued efforts at relatively low levels of remuneration, I might add. But to the matter at hand, we have I don't think we could have put together a better team of people, Robert Brenner and David Harvey. When we were putting it together, all sorts of thoughts about how we should put it together. And what came to my mind was, listen, let's just go for the people who know what they're talking about. Right?
Oh, wrong. Wrong.
So we have our usual, false modesty is afflicting somebody on the stage over there, but we need not be too much detained by that. But let me just say a few words about Robert Brenner. Robert Brenner is a visiting professor in the Department of Economics at the New School. And Robert is the author of many books, as people know. I first got acquainted with his work around the Brenner debate, which of course is remains the seminal debate around the origins of early capitalism. And then more recently, his work on the current economic situation, certainly running into the 2000s and running into the crisis in 2008 and continuing. The book on the boom and the bubble, the US and the world economy, which was published by Verso in 2002, and Economics of Global Turbulence, also published by Verso in 2006. And I gather that Verso may be for the live streaming or recording this event. We're very grateful to them for doing so. His work focuses on the fundamental contradictions of contemporary capitalism. And his most recent book is The Political Economy of the Rank and File Rebellion. In Rebel Rank and File, Labor Militancy and Revolt from Below during the long 1970s. Again, published by Verso in 2010. David, my distinguished friend and colleague, also a professor of anthropology, along with myself, right here, and is the author of innumerable books. I mean, the list is much too long for us to go into here. His most recent, I think, is The 17 Contradictions and the End of Capitalism. But it's a dangerous thing to talk about most recent with this man, right? Because the books keep tumbling out. And what you think is the most recent actually turns out to have been superseded in the most recent months and so on. But that one certainly, which was kind enough to give me a copy of, the tremendous book, isolating, identifying. So, the methodology is what strikes me in that book, which is it doesn't try to be descriptive and to discuss every God thing under the sun, right? But really to zero in on some specific crucial factors, some crucial moments, which we need to grasp deeply in order to understand the larger whole. And this is really a profound book. The Enigma of Capitalism, The Crisis of Capitalism by Oxford in 2010, a companion to Marx's Capital, Limits to Capital, Social Justice in the City. David, I mean, the list is extraordinarily long. He continues to be teaching Marx's Capital. He's been doing it for 40 years. His website, as some may know, has over 2 million hits and growing. Is a remarkable person who has held high, if you may use that phrase, somewhat archaic, I suppose, but nonetheless, held high the banner of radical Marxist political economy consistently and undeviatingly for a long period of time. And we owe him a great debt, as we do all people who labor in that vineyard. So this is who we have for us this evening. I think we look forward to an excellent discussion. I'm going to invite Robert to begin. You may sit if that's okay with you. If that's fine, you can sit there or whatever you wish.
That's fine.
Yeah, okay, fine. Thanks very much.
I wanted first to thank Don for taking the initiative to organize this event. No one needs to be told about anything about this moment where essentially, the way I would see it, it's up to us. I mean, you'd have to have been having your head in the ground not to understand, and I'll be talking about this in a second, not to understand the way in which the neoliberal political economy that has been put into place for the last 30 or so years was essentially incarnated in Hillary Clinton. And that is what you need to know in trying to, the first thing you need to know in trying to understand why this, this Donald Trump character is is where he is. So I'll try to, what I'm going to try to do in this presentation is, as Don suggested, to try to provide an idea about the economic constraints on politics, so that we can, have an idea of what's in the ballpark, what's out, what's really not on, and hopefully that will inform our discussion of what might be happening in the Trump presidency and in relationship to alternative politics. Now, you would have had to have been vacationing, I think, on Mars, not to have gotten word of the incredible shift in income distribution that has been taking place over the last, again, since around 1980. Thanks to Piketty and Say's, we now understand that to look at income distribution is to, in this period, is to look at top earners. And what we have, as you probably all know, is a extraordinary shift upward in the percentage of income controlled by the top earners, and we're now right at pretty much at the peak that it's ever been in U.S. history. I don't know, people could quibble maybe right before, around 1929, it might have been a little bit higher, but it's about at the absolute peak. So everyone knows about that. But I think the discussions about income distribution have, in a way, obscured what, in my view, is the deeper development. And that deeper development is the just horrifically bad. It's really hard to say, to come to terms with how horrifically bad the the development of the economy has been over the last 30, 40 years. So what you have, it seems to me, is the bottom line is to understand that decline. Decline is at the center of the, so to speak, paradigm. And it's in the context of that decline that we can really understand the development of the extreme development in terms of income distribution. So to put it, flatly right at the start, you have, even as early as the 80s, a very difficult time in getting any sort of significant growth, and therefore problems not only for working people, but even for capitalists. And it's at that moment that we have a political response, a political economic response to slowed growth, and this is the neoliberal development, which is all about shifting income upward, redistributing income upward. So you have these two trends, and that essentially, that's what I want to develop today. I want to talk about the economic, what's at the root of the declining dynamism of the economy, and then talk about the way in which relatively early on, it seemed like only yesterday, but it's a long time ago, that this trend, this upward redistributive trend occurred. And I think that upward redistributive trend is what has given, obviously, the opening to the world's far right in many forms, from Le Pen in France to Brexit to what we have here. And I think understanding what happened in the economy gives us a very direct way in to what is happening in the polity. Okay, so let's begin. First and most important, we have been experiencing since around the late 60s, early 70s, declining economic dynamism across the world, meaning, and it's quite shocking, meaning that if you're talking about GDP, or if you're talking about investment, capital stock, if you're talking about productivity, if you're talking about wages, if you're talking about per capita income, consumption expenditures, you name it, there is a more or less straight downward trend. So, and these are all the kind of, these are the standard variables that economists use to check out the health of the economy. And what we have across, not just in the US, but across the advanced capitalist countries, certainly, and we could talk about the developing world, but certainly in the advanced capitalist countries, we have that downward trend. Each decade, each business cycle, worse than the one before. So that's the bottom line, and I think that's where we have to start out, because you can't, when you're talking about income distribution, have to ask the question, what is there to distribute? And what I want to imply is that there's not a lot, which is why we have such an organized, hardline, neoliberal politics, which shows, well, we can see right away, there's no sign that it's going to be, anything is going to change on that score. We already know who's been reelected as head of majority leader. I mean, it's Schumer and Nancy Pelosi. It's not exactly a kind of mea culpa about what's been going on. So why then? What has opened the way to this long downturn, as I would call it? I would say that the key here, and this is a kind of a familiar way of proceeding among Marxists, people on the left, is to look at the rate of profit. And what we had is a long post-war boom, quarter century, golden age, whatever you want to call it. Profitability was high. As we shift into a slower growth path, roughly between 65 and 75, the rate of profit, it's in that period, sharply falls. And it doesn't fall that much further. It falls a bit further by the end of the 70s, but it's basically stays down, maybe 40% below that peak. We're talking about manufacturing here. It's not as extreme outside, but it's a very, very sharp fall. So then, of course, if you're going to say that the key to the slowdown is the fall and failure to recover the rate of profit, then you have to ask the question, okay, $64,000 question is why fall in the rate of profit? This is an ongoing intense debate among everyone. Here's the way I would look at it. Here's what I see as the core of the problem, and I think if you see this, you can begin to see why neoliberalism, that is redistributive patterns, redistributive upward, becomes such a crucial alternative for the elites, for the ruling class, and so on. And so what I would say is the source of the problem is a fall in the rate of profit in manufacturing. So fall in profitability. Why fall in profitability? Because there's a fall in profitability in manufacturing sector. So what's behind that? It seems to me what the pattern, and we don't have a lot of time for this, but the pattern of post-war growth, even starting as far back as the 50s and 60s, and it comes out of actually the structure that emerges in the late 40s, is that you have one after another later developing economy entering into the world market on the basis of its ability to reduce costs and to enter into the manufacturing sector where, to do the same thing as was being done before, but cheaper. So you have, first case was Germany actually, then Japan, then the NICS, then the East Asian, then the Southeast Asian economies, and then of course the big one, China, which really kind of just pushes everything over the brink. And then even now you have further entrants. So you have this ongoing entry into the economy, forcing down prices and making it difficult to sustain the rate of profit. Meanwhile, those already in the lines are not readily going to easily cede their positions, so they stay in the line. So what you have is, speaking very simply, and in a kind of rushed way, is that you have essentially a steady buildup of overcapacity instead of what you might expect, a fall in profitability, inducing those firms and those industries where that is to leave the line because profitability is low. What you have instead, you have a continual entry and not very much exit. So I see that as the core, and it's really the core of the problem for the advanced capitalist countries. Now, that said, you have between maybe the mid-60s, the end of the 70s, fallen rate of profit of something like 40%. And this is not alleviated. The downward pressure is continuing. So the question is, what is the result of this? Why are we looking at profitability at all? The reason we are is because the fall in the rate of profit through a series of channels is what's responsible for that low growth, that very slowed growth that I was talking about in the first place. So what's going on is that you have, with a fall in the rate of profit, you have a lower incentive, you have lower surpluses to invest. You have a lower surpluses to invest. So that means that there's lower demand for capital stock, capital goods, capital to, expand, right? So fall in the rate of profit in the first instance means fall in the demand for capital goods. Second, it induces the capitalists to take action against their workers, basically. And so what you have is a across-the-board attack on wages and indirectly, with the help of the state, social spending. So what you have then is a fall in demand, a fall in consumer demand. And since the governments are quite attuned to the needs of capital, you have, thirdly, a drop-off in social spending and so on, which we all know about. Does become the heart, although not the only heart, of that neoliberalism development. So you have more or less continuing and permanent austerity. So what does that mean? You have problem of demand in capital goods, problem of demand in consumer goods, problem of demand in government services, and so this is going to force the economy downward. And in the past, that had always been followed by deep recession or maybe depression. But we know that didn't happen, and that's one of the essential features of the post-war period, distinguishing it from what came before. What you get is, of course, government stepping in to try to subsidize demand to make up for the demand that is lacking because of the fall in the rate of profit. So what is actually driving the economy downward, what is the direct driver of the weakening of the economy, is this problem of declining aggregate demand. So bottom line, fall in the rate of profit. But the way it works is through falling demand and falling growth of demand, and you'd expect that to be problematic, leading to some kind of deep downturn. But you don't have that. You have, starting pretty much right away in the 70s and 80s and so forth, you have the government taking responsibility for stoking demand. We know the story of deficit spending and low interest rates. That is adopted pretty much across the capitalist world, and is what keeps the economy turning over. But because of the weakness of the economy, because that very growth, that very subsidy to demand keeps a lot of firms that should be going out of business in business, it means that over time, as you stoke the economy, as you stick in more and more demand, you get less bang for the buck, as the economists used to say. So this process of the growth of debt is essentially as the key to preventing the kind of cataclysm that was more or less to be expected in an earlier period. But the result is that with growth of demand, leading subsidized demand, bringing less growth, what you're ending up doing in effect is gaining stability at the expense of dynamism. And so by the early 90s, capitalists are looking around and the governments are looking around and saying, this really can't go on. But that is a key, that in my mind, to my mind, is a key moment, key turning point in the post-war development, because what they see at this moment, and what I want you to see at this moment, is the bind that they're in. So on the one hand, what they had always used, Keynesian remedies, is not working. But I don't know, probably a few of you remember what happened around the turn of the 90s in both Europe and the US, and that was an impatience, an attempt to free up the market, right? And what that meant is they're going to stop this deficit spending. They're going to let the economy be free to grow on its own, with its own dynamism. But what did they find out? That as they did, both in the U.S. and in Clinton's, in the U.S. and in Europe, in the run-up to the Maastricht Agreement, what goes on is that they, remove that demand. The removal of the demand sends the economy into deep fall. So this is what I want to have you guys see, that already at this point, the bind that they're in is palpable. The reason I say that is because over the next period, which is, I don't know how many people were sort of born when, but for a lot of people who were, coming of age in the late 90s, early 2000s, there's this incredible illusion, which is of an economy that is no longer exactly collapsing, exactly falling. In other words, there's a kind of it's not saved, but it's kind of moderated. And what's going on there, that's the government turning to what you might call asset price Keynesianism or bubblenomics, which just means that interest rates are brought down to substitute for Keynesianism and drive the economy by driving up asset prices. And so first you had a stock market boom, then you had a housing boom. But these prices that are being driven up have no support from the actual income that's there. So in the 90s, you have a crazy stock market, profits don't keep up, crash. You have in the 2000s, crazy housing bubble, supposedly supported by workers, the wages don't grow, and so there's a crash. And we have the Great Recession. So the Great Recession, what I want to emphasize about the Great Recession, which has been our lives for 9 years now, what I want to emphasize about the Great Recession is that represents a continuity, a taking up of the already existing path of growth. And if you guys had the time and just, it's the simplest thing to do, look at the numbers since 2009 in any indicator you want. And they're by far the worst, certainly since the Great Depression, and they're worse in a certain way because while the Depression was deeper, it only lasted maybe 8-10 years, pretty miserable. That we've had a downturn going on for now like 30 years. So that's the starting point, the basis of the problem. And it's the problem, the weakness of the problem is the underlying weakness that Trump and company now have to face. That's the underlying weakness. And we could talk about how difficult to get a policy based on capitalist profit-making is under these circumstances. Because what we've watched is what happens when profitability is a determinant. We get this downward trend, which reaches a rock bottom in this period now. Nothing's changed. Okay, so where does neoliberalism fit in here? Neoliberalism, what we all understand as this attack on working people, is the response to this terrible slowdown, because you're not getting a growing pie. Your pie is growing very little. And even if you get the same, you get a decent rate of profit, that's not going to add up to very much. And the difficulty here was already evident in the 70s and in the beginning of the 80s when they did this huge stimulus. In the U.S., and then they tried to protect American industry and subsidize American industry in the face of this intensified manufacturing competition. And what happened is you get no response, and you get a kind of intensification of that overcapacity that, in my view, that opened the way to the right. Because in what was clear was the Keynesians were completely at a loss. They had no way out. At the same time, the whole run of policymakers had no idea what can we do at this moment. So what happens at this moment, and that dominates the political economic situation, is what I would say is this what we're talking about in this neoliberal thrust is essentially has two aspects. One is the one that I think we come to first, because we're thinking of production and we're thinking of who gets gains from production. So we know massive attack on wages, marketizing everything, taking. David has written very eloquently about the many different forms in which what had essentially been parts, services, goods that had formerly been in the market, taken out of the market, put in the welfare state, education, you name it, massive state services, one by one, these are thrown back into the market, subject to competition. And when you have competition ruling, you have the people. You don't have to do much, because the people who have a lot of capital, people who have a lot of skills, people who have technological capacity, they just win out. That's what the market is about. So that is one side of it, and what has essentially happened to keep capitalists basically going is that you have a continual downward pressure on wages that is not really restoring profitability, not restoring dynamism, but keeping things going. But then there's the big story, which I think we know about, but we don't talk enough about. And that is the second article. I'd say there's a second element in neoliberalism. And what this is about is, it's a kind of brilliant, if you would think about it, because it started happening right around 1980 under Reagan. It started a little bit earlier that under Carter. And what it's about is saying, gosh, it's awful hard to make a profit out there. So what we're going to do is we're going to directly transfer income without all the fuss and bother of investing in new plant and equipment, investing in workers. We're going to just go straight to the cut to the chase. And what are we going to do? Massive tax breaks, corporations, individuals, and so what you have there is this direct ripoff that this is only the first. You have the second, you might say, is the huge opening to investing in government debt that emerges from those giant deficits of Reagan. And even someone like George Will just was scandalized that, they're getting these incredibly high interest rates. They're just putting their money in there. This is the first experiment in driving the stock market up to provide income for rich people. And then there is the big one, which I don't have time to go into enough, but the big one is finance, the development of finance. And why development of finance? Because what you have to see is the way in which financial gain can take place has really been, in economic terms, has really been cut off. The economy is sliding down. What finance was actually it was a service. It was a service that gave corporations the ability to go on. So when you had this great boom, the banks boomed. When they went to Europe and multinational corporations, the banks followed them. High rates of profit for capital, productive capital, high rates of profit for banks. They're doing what they're supposed to do. But at the point at which the economy is falling, there's no place There's no place to be able to make a financial profit. And yet, it moved, so to speak. We know there was this gigantic growth of financial profits that already by 2000 had outrun manufacturing, and they got even higher. What's that about? I can't go into it, I'll just state it, is that, so I could come to the end of this talk right away, what this is about is effectively, on the one hand, government intervention to, at every point in the sort of financial cycle, deregulating or opening an area. We're talking now about investment, not in the real world, investment in financial assets. What's happened is there's a crisis of profitability for the banks because there was a problem of profitability in real production for the corporations. Yet, how can that be? How can they be able to get these gigantic profits? They do so in investing in financial assets, and they can make money investing in financial assets because they get political privileges. They are allowed to, there's no regulation of the new lines. People who are in there at the beginning, as the bubble happens, they do pretty well. When there's over-entry into the financial lines, they stimulate the financial assets to make a financial bubble. And then, of course, there is a crash, and what happens then? Of course, there's a bailout. So at every step, government's there. If I had time, I could show you exactly the same thing happens within the corporations, which by political means, so to speak, within the corporation, the leading level of financial managers is able by political means, essentially, to operate in a situation where there's no way to make profits. They're able to make highly, highly risky investments. For a little bit of time, those investments pay off. They are the managers, so they take gains in fees, they take gains in wages, they take gains in bonuses. So that's what is going on with the rise of finance, a totally politicized development that needs to be understood in terms of the broader neoliberal upward redistribution. So now just very quickly to the politics. I think people can see, or should be able to see, the extraordinary absurdity of this. And we know that those people out there who voted for this guy who's no chance of giving them anything, they saw this absurdity. They saw a lot of what I've been talking about. So you have this kind of political some kind of hyper process pushing income in this direction by very highly political means. And it's this that is out there in front of everybody. And which, the only people who don't see it are neoliberal politicians, the financiers, the New York Times, all the people who talk to each other. And if you watch the Sanders campaign and all of this, or the Trump campaign, they can't possibly win. All these generals are for us, or all these bankers are for us. But everybody saw this as it is. So here's where it seems to me the Trump forces are, and the world, essentially the world right is at. The reason they have such a big opening is because of this neoliberal excrescence, literally excrescence. And so there is a dynamic political drive across the world to get rid of it, to attack it. And we see the various right-wing political manifestations of it. And this, it seems to me, is the kind of core logic of this, this whole Trump and the Brexit and Le Pen and all that. That's the core of it. That's logic of it, and it sort of gets them going. The only problem is now they're in office. Now they're in office. And they don't just face that neoliberal redistribution issue. What they face is an issue of production. And that is where they, it seems to me, are going to be in deep trouble, because what's been going on for all this time is trying to find ways to profitably invest, and no one has found it. They had a great moment in Asia, subsidized by the United States. That's gone. Nowhere are people able to make a profit, and that's where they're really caught. Because what kind of incentive can work? And we, just to kind of, push the thing a little bit further, they have had the biggest Keynesian stimulus in the first part of the 21st century for about 7 years. They had Bush spending, they had housing bubble, they had a series of tremendous stimulus, and what did they get? Nothing. So I think that's the framework. The political viability, so to speak, of Trump, which is kind of scary, because if he can keep things going for 4 years, he has a way forward. But he is up against incredibly difficult circumstance in actually trying to revive the economy. In my opinion, that's all out. The only way that can happen is if the economy is brought out of the realm of running by virtue of trying to make a profit and being brought essentially into different rules, which would be a kind of a statist solution. There have been statist solutions, we remember, not just on the right. I mean, not just on the left, but on the right. And that may be something that we should be thinking about. But I'll stop there.
Thanks very much indeed. Thank you so very much for that, Robert. It's obviously an extremely complex situation. It's really fascinating. I'm absolutely glad you brought up the question of finance in particular, because so much of the discussion has been about merchandise trade, NAFTA and TPP and so on, which are obviously, or Brexit and so on. But the fact of the matter is, as you point out, there's tremendous house of cards on top of it all. I think the currency trading, the daily currency trading is like $4 trillion per day. I mean, this dwarfs this nonsense that, people talking about NAFTA and Mexico and so on and so forth. I mean, you figure $4 trillion a day just in currency trading, and we're losing the broader picture of the situation when we don't see the totality of it. So thank you so very much. There's so many issues here. I noticed you threw in a nice little point at the end there, which undoubtedly will come back to the point, just in case anybody missed it. Right? The question as I got it that was raised is whether, from the point of view of the left, we should confine our solutions to tinkering in the market. The question that is raised is whether, from the left, the solutions should now begin to contemplate moving beyond the purely market sphere. That's the issue that has been raised here. And this is, I know, an elephant. This is absolutely taboo. One should never, ever raise this. This is a dreadful thought. Well, that's the thought, right?
I'm sorry, I just can't resist one little addition. American workers, especially these famous white workers, have been, for 50 years, this is how their wages have gone, like that. Not like that, but down. So what that means is the American working class hasn't had a raise in half a century. I'm not joking. That's where they are. So, and this follows from this economy that is barely growing. So what I would say is, why don't we stop shilly-shallying around? There's no reason, there's no justification. Hillary Clinton is not going to be able to give you a good argument on why we need to stick with capitalism. I don't think just saying that's not getting us beyond capitalism, getting us to socialism, but it frees us up to cease to kind of worship at that totem, and opens up what I could say is the path of struggle in which there is some different conclusion. And I think it's been exceedingly difficult for us to struggle without a different conclusion. And in a certain way, none of us believe in Tina, but Tina has been strangling us.
Thanks very much. David?
Okay. There are a lot of things where I overlap very much with what Bob was saying, some places where I don't, you know, but we're good Marxists, we know how to fight each other, so that'll be good. I had a very interesting moment earlier this week. I did an interview last June or July, I think it was, with a Turkish journal, and they finally translated it into Turkish, and they said it's finally there, but there's something we've got to ask you, because back then when we asked you about Trump, you said you thought it very plausible that Trump would actually become president of the United States. I said that at that time. I'd actually forgotten I'd said that back then, but they then said, so at the time we didn't ask you because we thought they were so daft that anybody would think such a thing. But why did you say that? And so I said, well, to me it was actually a rather simple kind of argument at the time. And I said in the 17 Contradictions book, I had written about 3 dangerous contradictions. The first was the relation to nature, which is climate change, habitat destruction, all the rest of it. The second was compound growth forever, which is impossible when it gets to the point of inflection where it starts to, the exponential starts to leap. And we were at that point in the history of capitalism. And I said the third is universal alienation. And I said back last summer, if I thought about the kinds of places I visited and the kinds of people I talked to and the kinds of things I was hearing, it seemed to me that there was a condition of massive, massive alienation in populations. And the alienation was in relationship to the labor process. There was a poll that came out by Pew about people's satisfaction, and 70% of the people interviewed said they either hated their job or they had no interest in it whatsoever. So it wasn't simply there was no jobs, it was there were no meaningful jobs. So alienation of that sort was there. People were alienated from the political process. People were alienated from what they felt was an excessive regulatory kind of environment. And, you know, the right talks about this, but I think all of us, you know, in education, I've been in CUNY for 15 years, and frankly, the amount of bullshit pieces of paper you have to fill out and send back, and little tests you have to take to show that you don't murder people in your office, things like that. You know, I mean, it's insane, you know, and at a certain point you kind of feel, you know, I'm not alienated in my job. I love being here, but there's all this alienating stuff going on around you all the time, and it's growing. And everybody, if you say to them, you know, well, do you like having a conversation about your telephone bill? Do you like having conversation with your health insurance company and so on? The levels of bureaucratic nonsense and so on. So people kind of are feeling that there's something grossly wrong with the way the state apparatus is working, and the state apparatus increasingly moves from trying to help people to being punitive. There's a wonderful movie just come out in Britain called I, Daniel Blake, which is about somebody's encounter with the welfare services in Britain and the total punitive activity of the state apparatus. It's an incredible movie by Ken Loach. And you know, and then you look at it and you say, are the police helping us, or are they, you know, being violent with us? And for large segments of the population, it's also the case. So when you started to think about alienation across the board, you'd find it everywhere. And you'd find it not only in production, you'd find it in consumption, you'd find it in daily life. And then if you kind of looked and said, well, where are all the protest movements going on right now? Well, you know, something goes bad in London and soon there's a riot and people are burning down the streets. And, you know, same thing happens in Stockholm. In Gezi Park, people erupt and so on. And these are not labor struggles of the classic sort. These are people, outbreaks, and of course, Brazil in June 2013. These are outbreaks of discontent, massive discontent, of alienated people who are alienated with daily life, no matter whether it's in the living space or the workspace or wherever. And it seemed to me that with the state of alienation, people respond politically by either being sort of passive and feeling unempowered, or, as in, say, the London riot, something comes up and there's this outbreak of kind of violent rage. And you want to do something, you want to destroy something, you want to tear it down. And it seemed to me there was a lot of that mood around, and it didn't surprise me when there was Brexit, didn't surprise me with Trump, doesn't surprise me with the kinds of movements that we're seeing. So with mass alienation of this kind, somebody like Trump could come along, but why Trump? And I thought to myself, you know, he has a very simple argument he can make to, you know, the mythical white worker in Ohio, which would be this. I'm a businessman, and I'm a highly successful businessman, he would say. I've made a lot of money, and I'm spending my money on running for an election so I can give voice to your discontents. That's what he would say. And he'd say, but look at my opponent. My opponent went into politics to make money. And she's been making money hand over fist in politics. Look at that money she got from Goldman Sachs. $250,000. I'm still waiting for an invitation, by the way. $250,000 for a lecture. You know, I'd do it for half that if Goldman really wanted. And then maybe, you know, we could, I'd contribute it to the CUNY Graduate Center.
You got 92 lectures.
Yeah, okay.
In 2 years.
So you know, so he'd make that argument, and some guy sitting on a bar stool and having a chat in Ohio would kind of say, I don't trust that woman. I trust this guy. I mean, he's spending his money on this, and I think that was a very compelling argument, and I think it sort of stuck throughout. And there are other issues involved, but this brings me back, however, to the alienation, and where the alienation is coming from. And you know, it certainly does come in lots of ways for what's going on in the economy. And I'll agree with some of the things that Bob has to say. Except I never like this falling rate of profit stuff. That's where we can have a little separate argument about that. But I think that there's a number of things going on. Certainly, I think that in the terms of organization of production and manufacturing and all the rest of it, what's happened has, of course, been a massive technological change. And the technological change has also allowed you to set up commodity chain structures. So it's perfectly possible right now for all of the sort of sophisticated engineering, design, innovation, all of those kinds of things, and even marketing and so on, to be located in the United States while there is a production going on somewhere else. In other words, you split the whole organization. And an obvious thing would be the relationship between the United States and Mexico, and we're seeing the emergence of these regional configurations. And the point about Mexico is that you could have the assembly line across the border in Ciudad Juarez, and you can have your research organization and your headquarters in Dallas. And this works extremely well because you combine the skills that come out of what exists in the United States, which is a skilled labor force and a skilled entrepreneurial kind of structure. You can combine that with Mexican labor, which means you just cut out American labor. So American labor is hollowed out. So I think the argument that Trump makes about that is to some degree correct, that NAFTA was very good at doing that. It's not only NAFTA, you see, because the Germans do this with Poland. And there are these regional configurations emerging where, you know, you've got these sorts of things being set up in this kind of way, where the cheap labor's over here and something else. So these things are now possible through information and technologies. And as we get to even further down the line, to artificial intelligence and all the rest of it, it may be possible to control the production line in Mexico by sitting at your desk in Dallas. And so those things are going on, and that means there's a very rapid reconfiguration of the global workforce and how the global workforce is being employed and the like. And so that privileged workforces that had privileges in the past, when actually the nation state still protected you against, as it were, workforces from other nation states, which existed in the 1960s, that got eroded through neoliberalism, but now it got eroded even further through the kinds of technologies that allow for these connections to be made. And that, of course, then leads to the fact that, the jobs do disappear. And to some degree, the argument that they all go to Mexico is correct. And so there is a sort of an interesting way in which you then start to re-ask what NAFTA is about and what the TPP is about. The idea that is about free trade is nonsense. It's about, it's about the United States trying to create a privileged production, marketing, organizational sphere which is antagonistic to China and Europe. In other words, what we're seeing is the regionality, creating of regional configurations of production and organization of production in this way. And what any big state tries to do is to create something like that when they have this privilege, and then they actually benefit immensely from that organization. But the working people of the United States don't benefit from it any more than the working people of Germany benefit from the sort of organization that exists in the European Union. I mean, it seems to me there's a hegemon, if you want to put it that way, within the European Union, which is Germany. Germany has benefited a great deal from the construction of the Eurozone, and we know perfectly well who has not benefited from it. And they've had their values sucked dry, as it were, by Germany. And the US was trying to set up something like the Trans-Pacific Agreement in order to do the same in that kind of area. And I think it's very interesting that since it's been sort of suggested that that whole thing is dead, who's stepping in to construct something along similar lines? Well, China, of course. So you see these kinds of things going on in the realm of manufacturing and production. But where I think it's what this does, of course, is to create a reconfiguration of how the world's labor force is being set up, and the problem here is that the rate of change is very fast. Now, if you sort of said, well, once upon a time, textile mills were in Lowell, Massachusetts, and then they went to the Carolinas, and then they went to Mexico, and then they, that took about 30 or 40 or 50 years for all of that process to go on. But what we're seeing is a compression, and this is typical of this kind of second contradiction I talk about, which is the acceleration which is going on, that this acceleration means that the thing goes much faster, and it's therefore much harder to adapt to, and therefore you've got recalcitrant populations who suddenly find themselves bereft where they thought they had advantages, they suddenly disappear. And so I think, again, one of the things we're seeing is a speed up of these processes. But I don't think the world's labor force has shrunk. In fact, if you look at the data, the world's labor force since 1980, wage labor force since 1980, has increased by 1 billion. It's gone from 2 billion to 3 billion. What's happened is that the whole of China's come in, all of Indonesia, large segments of India, and all the rest of it. And so we've now got industrialization going on at a very clip in all of those countries. And so there's an expansion of manufacturing in those countries. And a movement of manufacturing to Bangladesh and all the rest of it. But again, there's something very unusual about this, which is that for the first time, industrialization doesn't necessarily push you up the GDP ladder. In fact, industrialization very often now helps. Is one of those forces that doesn't push you down, but it just doesn't take you very far. And there's a very simple reason for that, because again, it goes back to the way the organization is set up. That if you look at something like Apple Computer in this country has a very high rate of profit. Its rate of profit's around 28% last time I checked it out in the New York, in the Financial Times. Shenzhen, Foxconn, that makes the computers, what's their rate of profit? 3%. So actually you've got a big gap between where the profit is created, where the value is created, which is in Shenzhen, and where it's realized. It's realized in the United States, and it's produced there. So again, we've got to look very carefully at the relationship between production and realization. And we've also got to understand that a lot of the struggles that are going on these days are at the point of realization, not at the point of production. So there are all sorts of issues, and the struggles that occur at the point of realization have a different structure from those that occur at the point of production. Because as Marx pointed out, the worker, when they are at the point of realization, they are actually buyers. And so the relationship is between buyers and consumers, and it's not the same as between capital and labor. And in fact, the kinds of struggles that go on at the point of realization have a completely different configuration in terms of population. Like if there is a struggle against rising rents, for example, then you've got all kinds of people who are becoming involved in that, not just simply workers. It's middle-class people and the like, because everybody's affected by, for example, the way in which property prices in this city are surging upwards. And if we wanted to have a movement against the rising rents and rising property prices in this place, then well, we would have many people from many different backgrounds and from many different class positions who would join in that struggle. It would have a different kind of structure. And so if you ask who was on the streets in Brazil in June of 2013, or who took part in Gezi Park, it was not classic working class. It was actually a whole mixture of people, including disaffected, alienated, middle class groups in the population who've been seeking to create, if you like, heterotopic spaces within the city where they could live an unalienated existence in a sea of alienation. I mean, those kinds of movements you see actually all over the place. So this is, I think, one of the points that I would really want to make. But then I would want to go a bit further, because I think that it's wrong to stress too much the falling rate of profit, and I think that the question is, where's the profit being made, how's it being distributed, how's it being realized, and when you take all that into account, the data looks rather different than it typically does when you get bunches of data about what the corporations are doing. For example, I don't see why it is that, I'm using Marxist kind of language right now, that the auto worker is somebody who is considered to produce value, but the person who makes hamburgers is not. In fact, the person who makes hamburgers is creating value. Now, who used to be the biggest employers of labor in this country in the 1960s? It was General Motors and Ford and US Steel. Who is it now? It's McDonald's, and it's Kentucky Fried Chicken and Walmart. And so actually what you've got is, and now how do you find out the rate of profit in the restaurant industry of Manhattan? I don't know what the aggregate rate of profit is. I really don't. I don't think anybody knows. So I think there's a kind of lot of value that's being created in urban settings, which is of this sort, which is not captured in a lot of the data on profit rates from corporations and all the rest of it that people use. I mean, if I stand at the corner of 86th Street and 2nd Avenue and look at what's going on, I see restaurants there. I see logistics, by the way, is a big area of profit making, and that's very profitable, as and the like. Anybody who engages in transportation is value creating. Marx's categorizations, so that and you see somebody's putting up scaffolding on one side of the street, that's value creating, and somebody's taking it down on the other side of the street, that's value creating. I mean, there's a huge amount of value creation just going on around you or in the city, but the thing is, it's not in a factory. It's not easily identified. It's actually a very fluid, kind of local, small scale, a lot of insecure labor. And of course, the labor supply is precarious and has got used to being precarious. And this is kind of an interesting thing about the culture of young people in terms of their relationship to job opportunities. You know, they go and work in a coffee bar and they're there for 6 months, and then one day they just say, I'm not bothering anymore, and they go somewhere else. And this, you know, from sort of perspective, my perspective, that's a terrible situation. But a lot of kids I know seem to like it. Kind of say, this is great, you know. I mean, I just go, oh, you know, I've got enough money now. I can spend a few weeks, you know, trolling around doing what I want, and then I'll go to another coffee bar somewhere, or I'll go pick up some other job somewhere for a little while. So people are getting used to a precarious, peripatetic kind of lifestyle around job markets. So these are sorts of things that are going on. Now, in the way I set up the way I analyze things, I like to think about the circulation of capital as a whole, as a totality. And there are 3 key moments in the circulation of capital. One is the moment of production, then there's a moment of realization, and then there's a moment of distribution. And capital circulates through all of those moments. And then you ask yourself the question, what's the driving force that keeps circulation moving? What is it? The classic way to look at this is to say, well, it's the incentive of individual capitalists or capitalist corporations to get profit. That is, you look at the moment of production, say people start with a certain amount of money, then they end up the day with more money, and they do it by going through production and employing labor and getting surplus value out of the labor and extracting value from labor, and they get to the point of realization. So this is one place where, this is one way in which the drive is there, that the capitalist is in there and they're going to push the system because they're profit-seeking and the like. But what happens if there's no profit there? Well, the answer to that is, as Bob has pointed out, is the Keynesian solution, which is that somebody steps in and says, all right, we'll create the demand so that you can get your profit. And we create that through state expenditures. But where's the state expenditures come from? Well, they're going to have to come out of actually borrowing money, deficit finance, all this kind of thing. So, but you can imagine then that there are organizations who are busy sort of pushing the system by creating demand as much as possible. And I think that is another source, if you like, of the energy that runs into the capital accumulation system. The third source is what occurs at the moment of distribution. A lot of people have surplus money. And at the point of distribution, they want to put that somewhere and they want it to earn something. So, just to take an example, a pension fund. I have a pension fund. I'm in TIA. And there's the pension money. And what do? Put it in the pension fund and nothing happens to it? No, I expect the pension fund to make some money out of it. So I want TIA to actually push the system. And how does it push the system? It goes out and it offers credit to somebody. It markets debt, if you like, and says, okay, you can borrow money, but what is debt? It's a claim on future labor. It's not a claim on present labor, it's a claim on future labor. And basically, my pension fund in 5 years' time depends upon the future labor, 5 years' time, which is being brought back by my pension fund. So there's pension funds, and then there's the stockholders, and then there's the bondholders, and then there's the banks themselves who have money. So they're sitting there, and all of them want a rate of return. And they're going to push the system as much as they can. And historically, I'd like to suggest this, that initially, yeah, the capitalist seeking profit was important. In the 1930s, that began to break down, and so you get the Keynesian thing for a while. Right now, who's the energy behind the whole system? It lies in the field of distribution. That is, it's the people with distribution who are creating the debt, who are actually pushing, therefore. Now, debt has to be redeemed, and it can only be redeemed through some form of activity, which is going to, give me my 5% or whatever I expect to get on my pension fund. So this redemption of the debt means that value has to be created somewhere else within the system in order to redeem the debt. Now, how is that done? Well, of course, one of the ways in which it can be done is to borrow more debt, in which case you've got a Ponzi scheme. But there's something else which goes on in the debt thing, which I think is terribly important, which is that debt forecloses, and I think the relationship between foreclosure and all the rest of it is important. Debt forecloses the future in certain ways. That is, you are bound in some way by the assumption of debt. And as a result of that, this is a form of social control, and it's a key form of social control which most people are suffering under. That is, what is being produced is a society which is based on debt peonage. And everybody, I think, understands that. And the system understands it very well, because when, for example, mortgage finance was set up in the 1930s, there's this famous line, debt-encumbered homeowners don't go on strike. Debt-encumbered students, they don't go out there and, create a ruckus. So actually, the whole kind of debt structure is now actually what is completely involved. And there was this wonderful moment, which I always like to go back to, when Clinton won the first election, and he sort of was talking about his economic program, and Rubin said, you can't do that, and Clinton said, why not? He said, well, Wall Street bondholders, etc., won't let you. And Clinton's famous response was, what do you mean to say my whole economic program is held hostage to a bunch of fucking bond traders? And Robert Rubin said, yes. And so Clinton came in promising us universal health care. What did he give us? He gave us NAFTA. He gave us the reform of the welfare as we know it. He gave us a criminal justice system reform, which was highly, it was really quite vicious, and eventually repealing Glass-Steagall. So, and that was what the bondholders said. Now, there's a big question mark, right? Who's in charge of the damn system, the politicians or the bondholders? And I think the answer is, you look at Greece and all the rest of it, it's the bondholders. The bondholders, and by that I mean my pension fund as well, are all part of this. Now, what this means is there's an acceleration. There is a growth of indebtedness. And the important thing about this is that that's the only form of capital that can increase without limit, without any limit whatsoever. Other things increase, but they have a limit. For example, I really have to always put this in because it always completely blows my mind. China in 2 years consumed 45% more cement than the United States consumed in the whole 100 years before that. 3 years. Well, depends where you start. I mean, this is huge. And what's happened in China is absolutely astonishing. This is where I sort of depart a little bit from Bob's picture, because China in 2007 had 0 miles of high-speed train network. It now has 12,000 miles. And why did it do that? Well, because it needed to get out there and employ labor. When its export industries crashed in 2008 because the US consumer market crashed, what happened? Chinese had to find some way to employ 20 million people. They lost 20 million jobs in 2008. And by the end of 2008, they had actually had a net job loss, according to the IMF, of 3 million. That is, they'd created 17 million jobs in about 9 months. How did they do it? They built the high-speed rail networks. They built highways. They built whole new cities. They consumed more than half of the world's cement, more than half of the world's steel, about 60% of the world's copper. During this whole period, commodity prices went up, and those countries that were producing, raw materials for China came out of the 2007-2008 collapse pretty well. Australia came out pretty well. Chile came out very well. Why? Because China said, send us the ore, send us the copper, send us the, the lithium, send us whatever. We need it, we need it, we need it. But there's a limit on how much cement you can damn well consume. I mean, when you start to think of an exponential growth of the use of cement that way, it's pretty terrifying. But one of the consequences of this was that the Chinese actually went from relatively low debt to GDP ratio to a very high debt to GDP ratio. So they're heavily, heavily in debt. They've gone into the debt creation game. Now, this is I think probably, I mean, what Bob was getting to at the end. On the other side of this bit of paper, you can't see it. This is a graph of total debt. The IMF has just come up with the total debt in the world from back when, and around 1970. Look what it does. It takes off like this, goes crazy like that. It's on an exponential curve. There's a little blip, 2008, where it kind of goes down like this and then it jumps up again. This is Ponzi finance in action. This is debt peonage in action. And everybody knows that it's experts in the manipulation of debt peonage who come out with all the money, and experts in debt peonage who are going to manage the economy. And it's so fascinating that the two guys that Trump has appointed are exactly people in the debt peonage business. What did they do? Where did they get their money from? Both of them got it by taking over a lousy bank, evicting people. So and this is not a labor problem. This is kind of you're evicting people from the house. You've got the foreclosure stuff, And nobody kind of checks out a little bit about, how many people got foreclosed upon and what impact that had in terms of the alienation of populations. From what damn country are we living in that does that? So it gets me back to kind of, the deep discontent with this system. And I think we're going to see a revolt at some point against debt peonage. And I'm surprised in some ways that the student debt thing didn't morph into a massive kind of movement, but it's actually very difficult to get out of it for a very simple reason, that if you had a moratorium on debt or a jubilee or whatever they would like to say, and therefore you wiped it all out, you'd wipe out my pension fund. So you can't do that. This is what I mean by debt peonage. You are locked in. You've got to support the system, because if you don't support the system, you are screwed. And then they do all kinds of weird things, like I actually have, if I took all the money out of my pension fund, or took a large chunk of it out of the pension fund and got rid of my mortgage debt, wouldn't that be a sensible thing to do? Yeah, it'd be a very sensible thing to do, except all of the taxation arrangements and everything else make it almost, uneconomic to do it. So the system gets structured in such a way as to lock us in to debt peonage. And that seems to me to be where the major forms of alienation are coming from. And I think that is something which is all over Europe and it's everywhere. This seems to me to be something that the state, as it's currently structured, cannot deal with. Because, as Clinton said, they are dependent entirely on the power of the bondholders. And if they go against the power of the bondholders, in the same way if I go against the power of the bondholders and I lose my pension, the state loses its finance. The state loses its power. So here you've got the nexus, what I call a state finance nexus, which is the crucible of power. And that crucible is one which has managed to, with all these tentacles, to lock us in. And the big question is, how do we get out? And by what forms of social movement can we get out? there are individuals, and I've said there are lots of heterotopic kind of spaces emerging in urban areas where people try and live and say, I'm not going to get into that debt economy. I'm not going to live that way. I'm going to find some other way to live. I'm not going to sort of get locked in all these sorts of ways. But at that point, you have to understand that we are the problem as well as them. In other words, it's not just them. We, in terms of what we do and how we do it and why we do it, we are caught in the trap. And until we understand that and say we have to get ourselves out of this trap, then it seems to me we're not going to be able to do anything further than keep on going with this huge Ponzi scheme where debt will be created without limit, money will be created without limit, people will use the circulation process in such a way to extract as much money, wealth, and power as they can. And I think it's very, very emphatically the case that since 2007, 2008, almost all of the recovery has actually gone into the pockets of the top 1%. All of the data show that, right?
Yep.
And they're doing fine. And in fact, we have an amazing situation where that capitalist class is doing extremely well, while capital in general is doing very badly. We cannot expect that capitalist class to do anything about the situation. They have no incentive to do anything whatsoever about it. And many of us are also in a situation where we don't have an incentive to do too much about it, because if we do, I lose my pension, or I lose this, or I lose that, lose my house, lose this. So this is the situation, but we have to, I think, understand and unlock the situation in order then to talk about what kinds of alternatives might be there and how those alternatives might be structured and set up. Let me leave it there, because I'm sure a lot of people have a lot of things to say.
Thanks very much, David. We want to throw it open to the floor and get questions and comments and raise any issues. But it seems to me, just to make an observation, that one of the critical things about Trump and this operation here is, both from Robert's point of view and David's point of view of alienation, that they're very interested and, in fact, working very hard to capitalize on this discontent, right? To capture this discontent, but in order to reinforce their position economically and politically and socially in the society. So the name of the game, as I get it, right, is you get an insider who pretends to be an outsider, who then absolutely riles up the outsider in order to incorporate them again, afresh, within the folds of an insider operation. So it's an extremely sophisticated and shrewd operation politically, where you go out there, rather like was done in the 30s, if I may say so, in Germany, certainly after 33. Very, very similar. I'm not saying it's the same at all, but very similar, where there's this enormous alienation, there's 8 million people unemployed, and the Nazis come in, and they, between 1933 and by 1936, 37, unemployment is down from 8 million to about maybe close to 1 million or even less, right? Huge infrastructure projects, very statist operation, massive changes in the way the economy is managed, and they succeed in, for a time, right, solidifying the political, the social support for a right-wing regime. They do succeed in capturing this alienation for the purposes of strengthening their position in society. So I just wanted to ask, before I throw it open, what is your view on what both of you think of some of the things that Trump and these people are putting out there? The infrastructure program, for example, the particular operation around Carrier, which was conducted, which was absolutely predictable, and I don't think it should be minimized. I think it's a big mistake to dismiss it. That's my personal view. If you look at how it's been greeted in Indiana by the workers, it's obviously struck a chord. And I mean a chord among people who are still losing their jobs, right? The way in which they propose to deal with NAFTA, the way in which they're moving from multilateral to bilateral deals. What's our view as to what's the prospects of this kind of policy? And also, for that matter, what Bernie's saying, Outsourcing Prevention Act and so on. How do we assess the options which seem to be on the table at the moment? And then we can throw it up.
I would like to answer that question by way of partial response to David.
Sure.
Because I think we agree a lot, obviously. But in order to, my opinion, of course it wouldn't be, what I would want to say is that in order to understand the agreement that we have and the disagreement, we do have to come back to this question of the profit rate. And I want to emphasize it because it's also key to, I want to emphasize it even more because it's key to understanding the constraints that Trump faces. Actually, a lot of the things David said I agree with, but the description I agree with. I don't think I agree with fully the causal account. So David said that why am I so concerned about the rate of profit? You can see that the end of where we are now, he points out there's huge profits being made in this tiny number of firms who just so happen to have, the Microsofts, the Googles, and so on, who have, as he implied, tremendous technological capacity, ability to innovate, and so forth. So for them, high rates of profit because there's no competition. What I wanted to emphasize, though, is the way in which the rest of the productive heartland, so to speak, of the United States has been hollowed out precisely as a result of downward pressure on the profit rate as a result of one after another entry of lower cost manufacturers, and in particular, the implementation of these global value chains, which David quite rightly focused on. What are these value chains? It's easy to understand them because it's very much like Marx did that analysis of manufacture and detailed labor and talking about the way in which tasks that had formerly been craft tasks are now divided up into their component parts. And the advantage of dividing those tasks up into its component parts, when you had an artisan producing all of it, then you had to pay everybody at that artisanal to do this at an artisanal wage. But if you can divide the tasks in a craft object, but now you're talking about a whole range of manufacturing outputs, what you're ending up doing is what David said, but what you're doing is putting incredible pressure on the rate of profit. So you not only have these ever cheaper productions occurring, because people come in with low wages and they can adopt a lot, if not all, of the technology, and effectively more and more they're able to adopt. But then you have the global value chain, which allows an even more effective way of essentially distributing manufacturing overcapacity on a world scale. And what that has meant is what David said, but it didn't happen the way it's sometimes talked about, like a plan of American capital to essentially divide up the world in this way. the way it happened was intense competition in which the U.S. manufacturers could not compete. And that's why you have why I keep looking, forcing people to the rate of profit, diddling around or jumping up and down. Why? It's because there was this continual downward pressure on the rate of profit that bit by bit, the U.S., as a result, and it didn't happen smoothly, it happened through a series of crises, because the overcapacity is, you can deal with it for a while, and then you have the crisis. So what's going on is where I agree very much with David, is in the outcome. But you need to see what drove the outcome. And this is crucial for understanding China, and it's crucial for understanding Trump. Because what has happened, and it's also crucial, above all, to understand what David ended up with, this nexus of power, government power, and finance. This is the heart of the beast. Why? Because the result that David is describing, and I agree with, is to push out profitable production out of the United States. And you have, of course, a small group of incredibly successful and highly ultra-competitive. But then for the rest, where do you invest? How do you make money? The answer, what people have always said, to make as productive capital cannot make profit. Sometimes people have thought actually finance can come in and make a profit. Finance can't make a profit without being able to connect or tie in to actual production. So what David is talking about is what I was trying to talk about as well. And that is that the ruling class, so to speak, today is hugely dependent on finance, yes, but that finance's profit depends on the alliance with the state. It depends on almost like a feudal privilege. It's so far away from what we thought we knew about capitalism. So Trump is in a tough bind, because if we understand the response to that moving out of manufacturing, it's this financial sector that's subsidized, and then all these forms of handing money to the same people, tax cuts and so on. Those were the first things you saw in Trump. They're calling for the end of, not Glass-Steagall, but Dodd-Frank. They're calling for more tax cuts. This is the heart, remains the heart of the matter. And so then it seems to me that what is being revealed is that lack of alternative for them. Now, they would like to see the development of manufacturing through protection and through this demand. Yeah, but it will be so expensive in terms of American elite, American capital, because what it means is that it prevents. They're going to prevent imports, for example. Now, with the commodity chains that David talks about, they're almost up to, they're just about short of these super high-tech companies. So for the super high-tech companies, what they're for is the freest of trade, because they need to import all of that, right? And so they're up a creek. I mean, what I'm trying to say is Trump is up a creek, because every piece of the policy that he's proposing, if to the extent it's a populist policy, is going to hit at this form of organization of capitalism, in which the U.S. produces these high-end things and imports the rest. and imports it cheap, and therefore has free trade, and it even has a high currency, so it can buy all of that. So you have the financial sector supported by the state, you have just redistribution, tax cuts, and then you have not protection, but the opposite, super opening. So this is what Trump has. I mean, Trump could move in that direction. He could protect, and then he could subsidize demand. And then the problem, then perhaps if he did it big enough and created a big enough fortress America, there wouldn't, when they stimulated the economy, they wouldn't pull in, stuff from Asia and stuff, which is what they had done before. They will, be able to keep that here. But what's going on is you're talking about an economy that's really a statist economy, of course, a right-wing statist economy, but in this moment, it's developing against the totality of that neoliberal elite that has built up in this period as a result of international competition, falling rate of profit, and then this political neoliberal thrust. And that political neoliberal thrust is what's making Trump popular. But now he's here, and what is he going to be able to do with it? I just say one thing. I'm very dubious he can do any of this because he has no real apparatus. He has no real party to do it. His mode of success was this tremendously demagogic thing in which he actually, in a passive way, organized millions of people. He didn't organize them into a party. He didn't organize them into any sort of institution that could possibly, when they win, impose these kind of policies. Think maybe Le Pen in France, where they've had the National Front for years and years and are building up an alternative. And it's conceivable, I'm sure, they're just terrified in France right now about them winning. Because if they win, there could very well be a huge attack on the neoliberal economy, of course, in the name of anti-immigration, racism, and so on. So I'm dubious that Trump can do this. He could do it technically. Technically, I think that way is open. But I think every time he tries to do something that isn't benefiting, Goldman Sachs and hiring a Goldman Sachs guy to get rid of regulations, or more tax cuts, or keeping actually funds coming in for the greatest tech people in the world, I think he's gonna come up against it. And I think the easier path is to not to sort of slide out from actually doing that.
I'd like to ask a question.
Yeah, let's take some questions. I do agree that Trump's problem is that he's really a globalizer masquerading as a non-globalizer. So there's a moment of truth coming there. Let's have a question.
That is.
Okay, so I'm just a regular person. I don't know economics or anything like that. I don't know. I find neoliberalism offensive. I don't know what it really means, but I find it offensive. But anyway, I just want to understand. Clinton gave to Bush a balanced budget. We had great debt, but a balanced budget. Then came Bush, and then he decided to spend all this money. So, I mean, how is that, so that's increasing the debt. So it didn't have to be increased, and it didn't have to put us in such a mess. And so then came the 2008, and then we bailed out the companies. Okay, we were willing to go into more debt, but we were willing to give the money to the top 1% in tax cuts instead of putting it in the infrastructure. So that's a political decision, not that an economic decision, to increase the debt and not really give it to the people. So government has a certain amount of responsibility, and I don't think that they were responsible. Then we bailed out the banks, and then they weren't willing to bail out the people. They could have renegotiated the mortgages and all that, but they didn't do that. So it's like made middle class go down, down, down. So it's not a question, to me, it's These are choices that government can make to make our lives better. And they decided not to do that because they had the power, they were Goldman Sachs, I really don't know. But the government had choices, and we didn't have to be in such debt. We didn't have to go into a war that didn't get paid for. We didn't have to get the drug policy without being paid. We should have paid as we went. And couldn't have our economy survived very well without being in such debt.
Yeah. I think we all agree with certainly that view. Shall we just go? Let's go this side. Since
Yeah, I have a question
I have
about
a few questions for sure, not to come back to us. No.
please.
what you were discussing before the question. The horizon of much of the left seems to be remain on the question of income inequality. So the Bernie Sanders movement wants to raise the minimum wage, and I wonder if that is not just a strategic mistake, because even if distribution were equitable, there would still be the relation between capital and labor, but an actually impossible proposition if the economy is propped up in the fire sector and the service economy and financialization. Is it even possible to return to a state of affairs where the state guarantees a certain living wage and certain services, and capital is taxed at a higher rate and CEOs make less, et cetera, because all of that was predicated on and made possible by production growth, which we all agree has slowed, except in, as David says, China. I mean, would it even be possible for Sanders to?
David or Bob?
Yeah, but I think we should get some more.
Yeah.
No, okay, let's take some more, please.
Okay. This question is for Robert Brenner. It seems to, given the framework of the funding rates of profit and taking into account that the economy has been sluggishly growing thanks to economic bubbles in the last couple of days.
Then the bubbles burst.
Exactly. So there's just a given amount of distance that can be between real economy and artificial or fictitious economy. So I get the sense of when I hear you talk that the way out is socialism, but the question I ask myself is, within capitalism, is there a way, like there's a very wide notion that the Great Recession, the Great Depression, was solved through the Second World War and the destruction of capital and the war economy. So is there the possibility, do you see the possibility of engaging in a war as a way out of the crisis, and what the consequences would be for the population? If no, yeah, but I mean a more full-fledged involvement in war, and if that would involve civil population, and not just, it's not that it's a minor thing, but the impact that drones war have on the population is much different, and in terms of encouraging popular uprising and resistance.
Thank you.
My question is for Professor Harvey. I was really interested, you were talking about these social movements in which the working class is not the central actor, like the uprisings in June of 2013 in Brazil. And I'm in the urban education department, and last week we had a Skype with students from Brazil who are occupying their schools. There's, over 1,000 high schools and universities that are occupied. And one of the things that they said was the need for unity with the working class, because they said, you can imagine if there were 1,000 factories occupied, that we'd be in a different situation than 1,000, high schools and universities occupied. So I'm wondering what you see as the role of the working class in this new capitalist configuration that you described.
Okay, let's take that lot, no? You want to start?
Okay. So these three questions, they're kind of hard. The one that I find relatively easy, and I shouldn't boast, but I have a very close relative younger than me who organizes service workers, and I was talking to him about this problem of can the capitalist economy actually, given the pressures of profitability, can it actually afford to raise wages significantly for these, in these low-wage sectors? And I've been thinking about it since Aaron kind of argued with me about it, and I was sort of saying, of course, they could deal with a few dollars. But then I thought about who is in the service sector, meaning the capitalists in the service sector, and they are like an extreme version of like the manufacturers we talked about around the world, who are being pressed by new people, because it doesn't take much to enter those lines. You don't have to have much capital, you don't have to have much skill, you have to have not much anything. And so what that means is because it's so easy to enter, there's a tremendous tendency to overcapacity. They don't have high rates of profit. And they're very worried about this kind of business. I think it's, again, I think it's really talking about the bind that this economy is in that it has so much seeded any, productive dynamic. Because usually services would be supported by workers who are getting higher wages in other sectors, and demand would rise, and because you have, say, competitive manufacturing, something like that. So I think it's the gentleman who raised that question, I think, is raising a very good question, and to me, it's about, in the end, say we were talking about a socialist alternative, what would a socialist alternative actually look like when you're sort of starting from scratch, when you're starting from such a low level of living standards and productive capacity? Now, on the question of the war, I tend to have some doubt that was even the way out of the Great Depression, because what initially drove, the war in the sense of demand was what pulled the economy out of it. I hate to say it, but that seems to me the case, that gigantic government demand, and part to build the arms, of course, that created the employment to create the further pent-up demand to drive the economy. I'm not so sure that it was necessary for there to be, quote, destruction of capital in Europe to make this all possible. In a way, it made it easier to enter, for them to enter in with new technology. But I'm very uncertain that this, was, like, I'm trying to think of today, what would good exactly, maybe somebody could fill that out to me, what good a war would do for us at this point, how it would recover the conditions for productive investment. I just don't necessarily see it. I guess you could say the overcapacity would be destroyed. I'm quite incoherent on this point, as you may have noticed.
David, on the working class point?
Yeah, look, worker movements are far more likely to be successful when they have a great deal of support from neighborhoods and population. Almost every successful labor struggle I know has that quality to it, and I think the same is also true of the social movements. Of course, there are because of the structure of the social movements, there are varieties of them that are not in my backyard, from very rich people trying to keep developers and people who look like you and me out, you know. So I think we shouldn't kind of say all social movements are good, but then there's some pretty bad unions as well. So you know, the politics of it. But for me, the ideal situation is one in which you put together both the power of stopping things in the workplace and stopping things in the living space. I think we saw some of that power mobilized, for instance, in the immigrant rights movement back in 2006, when you know, people just didn't go to work, but they also shut cities down. So I think yeah, it's very, very important to try to build coalitions. But you have to understand that the capital-labor relation, which is the foundational relation which you're dealing with on the employment side, is very different from the buyer-seller relation which exists in the realization moment, which is very often the center of the movements, the social movements, which are, say, anti-gentrification or something of that kind. On the concept of socialism, I mean, I think there are steps to be made. I mean, for example, why is it that all these people around right now are so desperate to privatize Social Security? It's very simple, because the Social Security does not catch us in debt peonage. It's a pay-as-you-go system. And I would make the argument that we should get rid of all private pension funds, and we should substitute in its place a national program in which everybody, when they get to 65, has a guaranteed income. I mean, something of that kind would be a socialist proposal, which would actually get us out of saying, oh, I'm caught in this dilemma about, you know, how am I going to guard my pension fund, you know, sort of thing. So there are ways to start to think about each one of these elements, and of course, decommodification. I think this audience, probably all of you agree that there should be decommodification of education, decommodification of healthcare. At some point, I think the decommodification of housing becomes terribly important, because we have a crazy situation right now in housing, where there's a massive amount of building going on with the crisis of affordable housing. Because all of the building that's going on is for the upper classes, not necessarily to live in, but for the upper classes to invest in. We're building cities for people to invest in, not decent cities for people to live in. And you kind of go, this is an incredible waste of resources. I mean, look around, just go around, look at what's being built here. And then they come up with this crazy affordable housing kind of scheme where 20% have to be for people earning less than $80,000 a year. 20% of the units have to be less than $80,000 a year. Well, half the population of New York City is trying to get by on $30,000 a year. So that affordable housing is essentially lower middle class housing for, you know, teachers and, you know, assistant lecturers and people like that. So we've got this insane, I mean, and look at the forms, and this is, by the way, is going on in every city I know in the world. You go to Mumbai, you see kind of fantastic buildings going up in Mumbai in the midst of kind of, you know, crisis of affordable housing. You see the same in Chile, you see the same in Sao Paulo, you see the same in Nairobi, you see the same everywhere. And a lot of these places are not lived in. They're simply invested in. Or if they're lived in, you know, for maybe 2 weeks a year, when somebody comes here, for, you know, an Arab sheikh comes here to shop for a couple of weeks, you know. I mean, this is an insane use of resources, misuse of resources. So there are many things that can be done, it seems to me, kind of saying, well, okay, we're going to really cut out all of that stuff of people, you know, buying houses. But this goes back a little bit to what, also, it's a version of what Bob was saying, which is this, that people don't know where to put their money now if you want to save it. If you want to pass something on to your kids, what do you do? You put it in the stock market, zero interest rates? Well, no. Put it in housing, because actually what's happened since 2007, 2008, we had a housing crisis, but what's been happening to housing property prices recently? Just look at what's been going on in San Francisco, or what's going on here, what's going on in London, what's going on in Paris, what's going on everywhere. It's one of the best places to put your money right now, is to indeed buy an apartment in one of these kinds of new buildings. And then maybe, unless it gets like Syria and it gets like Aleppo, you at least have something to hand on to your, and it's a source of wealth to hand on to your kids. And this is what's happening. I even saw it in Palestine. I saw it in Ramallah, of all places. And you kind of go, this is a major, major trend of what global capitalism is about. And of course, it's interesting that a lot of the value which is being captured right now is in property markets. And guess who we have as a president? A property developer. You know? I mean, wow. This is really... But that goes back to the question about, you know, is the infrastructure stuff going to work? Well, if it was sensibly done, yeah, it could work like a dream, doing all kinds of things. We certainly need a much better subway system in New York City than we have. But what Trump is going to do is kind of fund mega projects which don't actually improve the quality of life for anybody, and don't improve the productivity of the economy in any way. I mean, this is the kind of thing. And he's going to do it with public-private partnerships in which a lot of public money will be siphoned over to all his mates in the property development area. I mean, that I'm pretty sure is what he wants to do. But, you know, so again, it's a question of what kind of infrastructures and how it gets set up.
Yeah. Listen, I think we can have one more question. I'm sorry, time is out.
Thanks.
Let's go over here. Sorry, please forgive us, but we have till 9 o'clock. We have to get out here at 9, and it's already a bit past 9.
Okay, well, I'll be brief. Thank you. You both, all of you, have painted a very grim picture of this local global conundrum that we're in, which is that we have a domestic electorate that votes in a regime that has global impact, and I'm a scholar of Mexico and share a lot of sympathy with my comrades there who really are pissed off that people in this country get to have so much power in the voting booth. And I think that really trying to understand what it is that we can do on the left is the big challenge and responsibility of those of us who do have that power. I'm an academic in a public university in Pennsylvania, where the average debt that my students graduate with from Penn State is $30,000. And really trying to understand how to be an academic in that context, of course, is something else. But I guess the question here that I'm chewing on, and it's something I've just really been trying to get my head around a lot, which is in about 20-odd years, the working class in this country is going to be dominated by people of color. And that myth of the white working class male is really not going to be sustainable anymore, even in discourse and in symbolism. It's really going to go out the window finally. But it really should have already. And what we saw, of course, was a huge split in the working class vote. People of color and working class did not vote for Trump. And white people who were in the working class and white people who were wealthy did vote for Trump. So I see white people voting for Trump. And, you know, white men, okay, lost cause. And then white heterosexual women voted with their husbands. And so we've got, you know, Frederick Engels helps us understand patrilineage and the bourgeois dream, you know, we have that analysis going on. But how do we think about what it means to have people of color as the working classes? And on the left, how do we think about the challenge, really, of confronting the old problems for the left of racism and sexism, but really when we think about the working classes as people of color, they are going to be the protagonists. And the informal economy is the expanding economy, which is why there is a drug war, right? So I just sort of thinking through those issues are things I'm chewing on. And any insights, very welcome. Thank you.
Thanks very much. Bob?
I would just say that if we have that attitude, we've taught, there's been prediction for ever, as long as I've been reading those guys who wrote about the new majority, non-white majority, which is bound to come. But if we are going to survive the interim politically, we have to do what I would say, to my shock, so one of the most conservative parts of the so-called working class just started talking about doing, which is the, I think it's SEIU, I'm not sure, but, or, you know, there was a big article in the Times about the realization that the fight for 15 has been confined precisely to the workforce that that Comrade was just talking about. Of course, it should be. Of course, we have to do that. But they realized, even this hidebound, incredibly conservative bureaucracy realized if they're going to try to fight for 15, they have to try to organize all those people, all those poor workers who are not being able to survive and who are trying to find a political way out as a result. So even the trade union bureaucracy realizes that there are millions and millions of workers out there who need to be organized. And they understand that why you have so much support for this pig of Trump is not this essentialist stuff about white people or white workers. They have been going downhill for decades and decades. We're not talking, I mean, people have to wake up. This, verbiage about privileged white workers. If that's privilege, I don't know what is the term for degradation is, because that's what has been going on. And what we saw is that the people who looked to Obama, for example, and would have loved to get some kind of political, social response to all these massive ills, he never supports a single struggle. Not Occupy, not Madison, not nothing. So what you have it's insane, it's completely irrational and disgusting, but it speaks to real interests. Fully 20% of the supporters of Trump voted for Obama. That's not a racist population. That's people who are fed up with neoliberalism and who can't, any longer say, people here, just a guess, they're not the most oppressed in the world. But even us, the idea of voting for lesser evil, this is the lesser evil, is the neoliberals led by Hillary Clinton, that great feminist, that have gotten us into this situation. Unless there is if we set a barrier between the organizers today and the quote white working class, we're finished. And so I would just say one further thing, which is about the nature of the working class. The people who, when we talk about who's resisted, it's what we call young people, right? It's sort of the Occupy people, the Sanders people. They're the same people in the squares all across the world. And people say, how do we define them? And they started talking about a middle class. In what sense are they middle class? They're middle class in the sense that there's been a lot of investment in them, a lot of, quote, human capital. But two things. They have no chance of realizing that education because there has been a collapse, an absolute collapse in hiring at the highest levels in the working class. And this is because of the perfection of globalization. And so we had a period where poor people couldn't get jobs. Now you have a period where these people can't get jobs. So they are not middle class. They thought they were middle class, but it turns out they have to get the kind of working class jobs that are for sub-college educated people. And on the other hand, that human capital that was invested in them, they had to borrow the money to do it, and now they're stuck here. And so it seems so obvious, it's not easy, but if the SEIU can see that we have to reach this mass of people, the people who are in Occupy, the people who are for Sanders, we have to try to reach that population, because we're talking about the people who made Occupy, et cetera. That's the working class. That's one key section of the working class. Another key section of the working class are all these people who voted for Trump. A fundamentally important section of the working class, of course, are the Latinos and blacks who are beginning to hopefully will break away from that neoliberalism politically.
Can I just add one thing? I think for me, the reason I start with the category of alienated population is because I don't want to start with any presumption that they voted out of some sort of either class or race or other kind of thing. They just voted because they were pissed off and they wanted somebody who was going to tear something up and pull something down, and Donald Trump seemed to be the guy who would do it. And I think there was a lot of that going on. And so I tend not to, in the first instance, to try to explain what happened in terms of these categories. On the other hand, obviously, there's a lot of work to be done. If I look back at the immigrant rights movement of 2006, it was extremely powerful, but one of the things that divided it was a division which was fostered very much by the press at the time, which was between Hispanics and blacks. And you know perfectly well that ruling classes love to divide and rule if they possibly can, and they're going to use all sorts of tactics of divide and rule. And that was a successful use of that tactic to defang what was an extremely powerful and potentially, I think, very activist movement. So I think that, yes, those issues are going to crop up in the form of organizing, but I think Bob is right to kind of say, you know, the organizing, you know, has to be super aware and super sensitive to some of these difficulties of forming these alliances, as is also the case that it's sometimes difficult to get people who are concerned with typical class issues to support social movements that don't have a clear class kind of perspective on them. So there's, again, a lot of work to be done, and some of it is theoretical work, which I think that can be done in universities and by people thinking through some of these problems and finding out the kind of information which would allow these alliances to be built up in a more sophisticated way.
Listen, thanks very much. More questions and answers. The point is for us to keep on questioning and to keep on probing, because these issues, we need to come to grips. Thank you so very much indeed.
We'll get rid of it by demographic.
Euthanasia by demographic.
It's so ugly. I do, of course, and you also, weren't you?
I ended up finding it came out.
Thank you, sir. Thank you.
Yeah, absolutely. I mean,
Right, right. I mean, no, it's a good audience. Yes, a good audience. You can ask me questions. Yes. We're on the right track. It's not to get moving beyond this, you know. I have to get out of here. Yeah, thanks very much for David. I missed the time.
Hi, Robert. How are you doing? We met at the Left Forum. You probably don't remember
I
me.
do. You're from Brazil, huh?
No, from Argentina.
Ah, that's right.
Yeah, near.
The funny guys from Argentina, the guys with the
us.
trots with a sense of humor.
Exactly.
Absolutely.
I wanted to give you this book that
Okay.
we edited. Terrific. I hope you have time to.
I
give
will,
it a read.
definitely. Of course I remember you. We were supposed to be in touch somehow.
Yeah,
I think you were supposed. I think you were
I
supposed.
sent you an email. I did.
I wouldn't be surprised if I just blew it and missed it. But we, yeah, we were going to hear. You were going to send us. What I really would like to hear is, you know, analysis of the developments in your home country in relationship to this book. You know, Cold War. I mean, it's obviously quite different, specific.
I'd be happy to send you something about that.
Yeah.
So, two questions I have. One is, the most important is you're at the new school now, right?
Only for the. Oh, I'm. Yeah.
So,
Yeah, no, he's not running again. But so the really interesting part about
How
this
long
is
are you
that
going to? I
see,
was. I
there's a
hope
rise of the
it's possible. Can you write me a few?
and then you have also a
Make
rise
it a lot easier for me to just say. Give me a few of the. One second. You know, write a few of the questions down, so it'll make it easier for me.
oh, okay, yeah. In advance. If you prefer reading interview, that's fine.
That might even be more realistic.
Oh, really?
Because you send me the email, the question, and then I can kind of do it at my leisure a little bit.
Absolutely.
Rather than take 2 hours and do the whole thing and probably do it a lot worse.
Okay, yeah. So, is it...
It's good to prepare.
Our Brenner is...
Our Brenner at UCLA.edu.
Okay, cool.
Okay.
And the second question is,
Hi. Hello, my name is Sihan.
Your name is?
Sihan, it's a hard name.
Okay.
But I noticed a lot of you guys mentioning Le Pen and her, you know, comparing Le Pen and the rise of,
Yeah.
you know, the National Front compared to the Trump. And you were right, like that Le Pen is a lot more organized. and it's been 20 years in the making.
Right,
I mean,
yeah.
Her father made it into the primaries. But I was just there when Fillon, out of nowhere, kind of came out, and they all thought it was either Sarkozy or Juppé.
I think he's gonna have trouble with Fillon.
Right, I don't think he's
I
gonna
don't
win.
think he's gonna beat Le Pen.
So
I
that
think
would-
it's an amazing opening.
But I don't think that.
Hey, there he is. Oh my God.
But I guess my thing is, like, I think that the left is gonna win. Because, so that was.
The left is gonna win.
Yeah, I think that was my
The
question.
anti-capitalist party? God, I hope so. But I don't think they don't seem to exist.
A couple of articles. So do you see the impact of this still as whatever was in those formative?
Clicker's out.
I think that,
The normal stuff's out.
I mean, I don't know.
This was very lazy.
There aren't other organizations.
Yep.